Yeah, I mean, I always tell people, I said earlier in the interview too, that with ETFs, pooled accounts, certificate accounts, these are fraud. They don't represent actual physical metals. They may look like they do up front, but there's all kinds of things going behind the scenes. If you really drill down into the fine print of these situations, it's quite shocking. And I don't think people even have any understanding. Just because it's associated with a Wall Street broker or something, they get involved with, oh, I want to own some gold, and the broker gets them right into the ETF, right? Because he makes a nice commission off of it, right? But in the end, they're going to find out that the value is just not going to be there because there's no real metal. And when metal prices go to these highs that I think are coming, they'll find out, unfortunately, too late at that point.
And theoretically, in the ETFs and so forth, it's supposed to be backed by actual metal,
well,
which you can claim or not.
Well, yeah, I mean, but during the 2008 meltdown, that was all exposed, right? There was multiple organizations, ETFs, that couldn't deliver the metal. How come? Because they didn't have it. See, they'll actually show you purchases of metal going in sometimes, but what you don't realize, it's being sold right out the back just as quickly. So ultimately, if you read the fine print there, it's just the physical metal is not there. You have to do your own due diligence. The pooled accounts, certificate accounts are, even more notorious for that. There's just legally by law, a pooled or certificate account doesn't have to hold but 1% to 2% of your money in actual physical metal. So it's let the buyer beware again. It's, do your due diligence. You don't have to listen to me. You find out for yourself one way or the other. But, overall, when we're talking about these things, people ask about gold mining stocks, precious metal mining stocks. Like I said, I write the newsletter, The Mining Speculator. I've been writing that now for 14 years. Hard to believe it's been that long. We've had all kinds of ups and downs. It's a very volatile market. And the disconnect, I think, for people when they get into gold, their first thought is to go into precious metal mining stocks. Well, that market does not go in lockstep. It's extremely volatile, and we've made big money at times in these things, but we've also lost big money, and it's not for everybody. Playing the mining stocks is a different animal altogether than physical metals. You own physical metals. I think personally myself, because I understand that market and I'm at a high level. I think the combination of owning physical metals and precious metal mining stocks can be very advantageous for those who understand that market. But the problem you have to understand there too is that 4% of the investors make 60% of the profits in that sector. So if you're not savvy enough to be in that 4% category, the chances of retail investors making money in mining stocks gets a lot more difficult. And you really have to play that market. It's extremely volatile up and down, and like I said, you can make money, but if you're not smart enough to get out, you can go right back down. That's just the way it works. So overall, mining stocks are not a substitute for physical gold and silver purchases. In combination, they can work for you.
Yeah, no, that's quite interesting, and it is kind of that herd mentality. The stocks work just as the precious metals do, and those markets are going parabolic. Everybody wants to get in.
Yeah.
In the stock market, having experience in that world is that, when it's going up, everybody wants to get in, but they're too greedy to get out when they should.
Well, that's the thing. The greed factor is you got to learn how to check the greed.
Yeah. Well, cool.